Good morning. Happy Friday. I think it's Friday. So, starting today with market internals because we've got a sell signal. Markets are up here on some news a bit, but we've had this retest of the prior high going on here for, I guess, a little over a week. And there's been a lot of running in place, whipping back and forth. And while this sell signal, right, internals, total put call ratio, breadth, there's a long-term sentiment, and it hasn't tagged the upper band yet. Does it have to? No. You can see where it did here, up in this area, and it was one more spike to the high. Don't think that these are turn on a dime market gauges, not like an NYSE tick indicator, which can mark a high or a low within minutes. This could come days, it could come a week later, where things actually start to correct a bit. And I've been using these for many years, decades, and they work. So, and my experience has been that it just doesn't turn on a dime at the highs, whereas at the lows, they tend to happen relatively quick, within a day or two. So this is the equity put call ratio, breadth, and total put call ratio. And you can see it's punctured through the upper band here. This one's punctured through the upper band. And, if the market was to stay up today, probably be more call buying. It can push this up. So, it's a heads up. As I said yesterday, tendency to be what accidents happen when these reach there. Until enough accidents happen, it's like putting your hand on a hot stove and it's like, oh man, that hurts. I'm doing that again, which means, buying the dip, things tend to go a little further. By no means whatsoever does this mean like bear market, crash, whatever. That is another internal gauge, which is nowhere near to signal such a thing. Just to say, hey, this would be a great time to have a short, maybe intermediate term market correction that could last weeks, a month or whatever, who knows, that could set up more long-term buying opportunities. Well, you see, McGraw, what I put here on the spiders, you know what's above here at 420 and up there are just stacked levels of open interest in calls. So besides these highs here, it ain't going up very much. I mean, I especially on a Friday, it's just not unlikely to happen. So, we're here at 420. And, the way this is set up on open interest, what the spot gamma guys do is, much more in-depth type of analysis and, all of the things that they do. Me, I like to keep it simple stuff. And I just see all that open interest stacked up like that. And to me, that truly is what is a call wall. There's just the levels are just stacked all up there with a high open interest of calls. And then if you go and look at the monthly expiration, it's huge on SPX at 4,200. So while intraday you get pops up and pops down, it just is going to pin it there. So, it's good information to keep expectations in aligned, and we'll see how this unravels that high open interest. It's on the weeklies that'll expire today, and the monthly isn't. So we'll see how that evolves into next week as to how that open interest changes on Monday. Yeah. Right. So it could be an individual strike where it's huge like that, which at 4,200 on the monthly SPX, I think it's around 32,000 open interest, the contracts. But what's interesting, and as far as the weeklies go, whether you look at 420, 421, 422, and so on, it's just all stacked up there up to 425, which, hey, if it could go to 425, I mean, that would be a big move today, but it just, I can't imagine it would be an explosive move. It would have to be a grinder to get through all of that. And then maybe it could feed on itself. So you can see that the markets are up here. They're stuck right, they're stuck right there at 420. They're give or take. So there's plenty of stuff there to the left. Let's minimize this. Everybody's got the gist of that. And so 420, you can see the congestion right here. It's the hourly has rolled over, but they're not giving it up. It came down into this unfilled gap area and it popped back up yesterday, and just after the initial rally in the morning into the resistance area, you may as went and left to play golf or the beach or whatever. It was just, you can see here, it was just a grinder sideways, flip-flopping back and forth. And now as it pops up into this area, you can see here it's a little bit above that. So maybe it can keep going a bit higher. But intraday, if you see it come back down below 419, well, odds are it's going to start to drop. And so we'll see. SPX, again, 4,200. That's the big number. Premiums is anywhere up in here, you should be fine. Anywhere up in here, and anywhere down below here should be fine. And so as it dips up and dips down, odds are it's going to flip-flop around in this area here. So if there's enough premium up here and down there, I mentioned just, I guess, a couple of days ago, consider iron condor, and things just running in place. As you can see here, other than yesterday's gap down, we've just had a pretty much non-event type of week, other than yesterday's move, which then it hit the 20, other than open interest type of information and anything else anybody's looking at, a simple 20 period moving average, which was lined up with this congestion area right there. You can see, look to the left, buyers stepped up again. And the Qs, what I do? Oh, here we go. The Qs, where are they? 332-ish, 332-ish, gapping up a little bit. There's plenty of resistance over here. 327 on the put side of the Qs. Yeah, at 327. Yeah. I got written down here, 335 is like 36,000 contracts. So, to get up here, odds are it isn't getting through that, especially with, we look to the left. That's really the bottom line, is what's to the left. And so, as explained when we did the Spot Gamma MT Live, my observations of this information was the best way for us to utilize it as pattern traders was once we see prices get to a reference point like that, which typically is going to be in alignment with support or resistance. Intraday, you start to get the spring being wound, where the pattern gets tight. You start seeing attempts to move in one direction that can fails, and it's like, okay, that's where let's just say the nervousness begins, because something's going to give. And so that price pattern, which I shared during that event, along with that high open interest level, where things are going to start to move, where market makers begin to unfold those positions. And if there's a void, I think that's kind of like a magic time, where you have multiple things falling into place that could produce a relatively large move. Okay. So 42.35 put spread 42.35. 235. It's not making sense. I'll call spread 42.35, 42. Yeah. Yeah. I mean, look at the topping tail up there. And, it's Friday, so look, the news is out that, the market's they're up here. This isn't as if this bar is a closing bar that would suggest to us that it could pop higher. If it was to close like this at the end of the day or better, of course, that's going to suggest that. Now, how does that play in with our market internals giving us a sell signal? As I said, they're not turn on the dime types of signals. Monday could be a big down day, so it's in development. 41.65.70 on the downside. I think so. You've got yesterday's low. Yesterday's low, when will be here, 67. You got support right there. It's up above here right now, so it would have to get through here. It would have to get through 4,200. The sticking point. We know it can go through there, and then the theoretical of that huge open interest there is that it'll has a tendency to drag it back up after it pokes back down. So I would say, yeah, that's a safe area. And Qs turn around, but we're far from the end of the day. It's the beginning of the day, coming up into a pivot, what we call minor resistance, but prices traded above and below. So in reality, from the perspective of MTS, Master Trader Technical Strategies, I'll just drag this over like this because based on, MTS, what's over there to the left doesn't exist anymore. Now, yeah, it's on the chart, but the point being, it's been used up as a reference point by trading above and below it. So this pivot high is directly to the left, and there's virtually nothing until you get up here. So could this go up to the top of the red bar this morning before it hits a type of wall? Of course it could. And look, you're looking at the hourly chart, and based on what I just told you, there isn't much to stop it from doing that. How it reacts to that, we'll see. You can see it's slowing down right now. Here was the news, the whipping around. So I think today, other than whatever is going to happen, on our 5-minute charts on the smaller time frames, probably we're not going to go very far in a meaningful way related to the higher time frame. Put that in perspective. The Russell, giant trading range. We've all seen the failed breakouts and breakdowns, and it's a giant trading range. And as we consider our market internals signal, and that, what has been more erratic and the weakest for the most part has reached its destination. So it's highly unlikely this is going to break out. And if it was to break out, it'd probably get slammed right back down again because it hasn't consolidated up here long enough. So this is in alignment with a bias that the momentum is going to stall, and it already has, other than the whip back and forth. And this is, up here a little bit. Bonds, got to fix this. You can see not really doing much of anything. And let's just take a look at yields. You can see not really doing much of anything. Kind of like just waiting for what? I don't know, but it's waiting here, and now it's forming a trading range, a tighter trading range up here. And when we see that, we see pivot highs, pivot lows, pivot highs, pivot lows, moving averages intersecting the middle of prices. The first thought is stay away. This thing is going nowhere. It's a frog in a blender pattern, and wait for something to signal it's going in one direction or the other, right? Which could be, a gap up and go. It could be a wide range bar. It could be something like this, that spikes down and back up again, but it couldn't get far enough. So we've got this trading range going on. And when you see that, the next thought is go to a higher time frame, see if it makes sense. And go to the weekly. Oh, it's in an uptrend, downside shakeout. Looks like, from a point of view of like symmetry, maybe this week is enough bars to the right. And the assumption is it would go back up because the trend is up. So we'll see what happens there next week. Oil, it's going to hit that $70 level. It's got to be a target. And, besides just hitting the whole number, we look at this weekly chart and it's a pattern that suggests, well, $70 could be just a momentary stall point, because what a base like this, a rounding type of a bottom and a red bar ignored on a weekly chart, and this is breaking out, that's suggestive that it's going to go significantly higher. So the Fed's looking at that. You got to start thinking, hey, the price of gas is going up, food's up, wood is stabilized, inflation, maybe. Commodities are up. Anyway, they're the ones with the controls. We'll continue to see if they decide they're going to do something at some point. Gold had a nasty day yesterday, flipped back up again. It is up in this resistance level, so I guess it should be somewhat expected. I thought maybe it could get a little higher, but this is signaling at least it's going to need a period of chopping around before it can get going. And silver, just pretty messy. Transports. It's trading range. So set an alert down here. You don't have to watch transports all day, of course. You look at too much as intraday traders, we're going to just get overwhelmed with information. So let the computer watch it. What we're interested in is if it comes down here and then what it'll do, or if it comes up here and what it'll do. Set to alerts and move on to things that are moving during the day, which Dan will cover. All yours.
Hey, I don't know if that's a capperism, but another good statement. Set to alerts and move on. I like it. All right, so getting a little pre-market pop on the employment number. I don't know if it was one of those things of lower than expected. Therefore, that's bad news is good news because it'll keep the Fed punch bowl running kind of thing. Where's my chat? There you are. All right, so all our opens seem fine. Zero DTE day. Look at this little thing. I just saw ripping pre-market here. But a nice turn right here. The turn. Actually, we have a bear put debit spread on Amazon. Had a nice ugly close. We'll see what happens. Do you remember Tesla? Tesla, we were watching. And I said yesterday, you know what? If it gets over these tails and then takes out a 30-minute high, let's keep an eye on this for a zero DTE spread. It's down a bunch of bars. Support. The zero DTE day for you new people means we love selling options and spreads that expire today, because then we don't have any gap risk. And so that's what I'm saying. That one's a candidate. Greg obviously talked about a few already in terms of maybe condors, puts and calls on the indexes. Sam, OCGN. It's opening flat. It's an inside consolidation bar. I wouldn't touch it unless it took out yesterday's low. Clean, long. Yeah, it was on my list. So it's in my list over here somewhere. And that is on the Reddit boys list, I think. And I didn't know that yesterday, or I think I would have been more aggressive. Here, let's when we slow down today, let's all go through this high short interest thing. We've been very active in the EV market. But Greg, I sent you a chart I just did pre-market. So the EVs were heating up just a couple days ago. But look where we got in. We got in on a beautiful higher low retest W pattern. I didn't even know it was on the high short interest list. And we got the beneficiary of this explosion. So we sold half pre-market yesterday, half at 18, made 136% return. So I love trading the high short interest stuff, but you just got to do it with our approach. Thomas, DKS, love. DKS, it's a buy setup, a couple overlapping bars there, but it's a bullish weekly. I'll put it on the list. Thanks, Joe. Yeah, we have a couple. XL, I don't like the topping tail. I'm sorry, love, I don't like the topping tail. But we have a couple beautiful bottoming patterns. We're in this one, X-ray Lima. I mean, we'll go through them later. FSR, look at that, beautiful. Nicola, I think we traded this initial pop here. We're already out of it. Oh, Thomas, that's gonna go. Twitter, I see no pattern, Thomas. The long-legged doji bar yesterday. I think I was at the gym yesterday, and then I saw the news on CNBC that said they were announced their first subscription service, something like that. And I don't know if that's what got going on, but work chart us, and there's nothing there that interests me. It's actually a sell setup on the weekly. Oh, Neil, yeah, I did see Tommy Boy on CNBC. And he's a smart man. I don't take anything away from him, and I enjoy listening to him talk because I fully 100% disagree with his bias if charts don't work. That's all. But I like the man. I've had lunch with him a couple times. This is a bullish inside bar, bullish pre-market. That's definitely worth watching. I'll put that in the bottom right here. That's worth watching. Maybe 15-minute high. SKLZ. McGraw, your HSIC, I still like a lot. Uh, the only concern is market internals getting overbought, but I'll watch it in the first 30 minutes. Love the daily weekly there. John Van Tuin, your drop down. NRG, it's a wide range igniting, but it's still in a downtrend at resistance. So these other bottoming patterns were a whole lot more compelling. Yeah, Daku had earnings, John, 209. So yeah, that's a 30-minute high and put spread idea, McGraw. I'm gonna put that in a window. So that's that Daku. That's a beautiful zero DTE put spread because on earnings, the volatility should still be spiked. I guarantee you for the first 10 minutes, it's the spreads are going to be ludicrous, which I don't want to trade the first 10 minutes anyway. UPST, we've been in a naked $60 put here for a while. I think we did it on this igniting bar, the next one after or something. For a directional, I would prefer an inside bar or two. Bluetooth, no great pattern to me, but possible day trade. Bat 2-1, your drop down. Freaking Zoom drives me nuts. Sure, under the lows. Yeah, it looks like it's gapping up a little bit. Set an alarm under the lows. Yeah, so I got all that answered. Let me continue here with my list. A coin, remember, this was in last weekend's letter to sell a call spread, and now it's just going sideways and cannot bounce, relative weakness. So this not only looks like a short setup, day trade, but let's keep an eye on that to do another call spread. I'm gonna put that in a window. And zero DTE spread, credit spread. Uh, PSTH. This is Bill Ackman's SPAC, and it actually was actually acting very bullish. And now I read in today's paper that they're getting very close to merging into some time entertainment or whatever. I didn't read it. At a $40 billion valuation. So do you know what that means, folks? To just quick little thing. The news is out, $40 billion valuation, and the thing's gapping down 10%. What does that tell you? It tells you that they thought the valuation would be more. That's what this chart was suggesting. But now it's an ugly gap. Oh, NCTY. So this isn't a nasty, nasty downtrend. But look at the gap. If it can hold the gap for 30 minutes, then it might be an igniting gap. So I have that in my middle chart here. Let's watch 30-minute high on that. Oh yeah, somebody's asking about UNH. Yeah, no, the stop's over the highs. So we got a call spread on that. The only I wrote the reason I'm looking at pool is because there was an article in the journal that said that's so many pools have been built that they're having a chlorine shortage. And so I'm like, let me look at pool. And what an amazing run this thing did. Um, I don't know, actually looks higher. AMC's, and it's going to be in the news every day. This meme stock, it seems like it's the new GME right now. But this is a climactic pattern. Remember the last 2 days we were talking about shorting the 140 calls that expired today, and I took a screenshot at the time. The 140 calls were $4.20. I tried doing that myself again, but Toss wouldn't let me. Got the old recheck alarm. But we're chartists. So so I think they would allow me to do a call spread. I didn't even try that. So let's keep an eye on AMC and GME. I don't mind trading these on zero DTE day. Let's keep both of those as credit spread ideas. Or if you're doing a put, I think they'll let you do naked. LEDS, nice little breakout last week, and it's still going up. So actually, I have a UNH alarm going off now that you're talking about it. All right, it's still not near our stop, but I don't like the breakdown failure. Look at Daco's flying. Wow. So now, unfortunately, that's telling me then, the more it runs, the value of those added money puts are getting smaller, and not sure it's going to set up for us. TRGP, I would be selling into that gap if I were long.